Okay, let's talk mortgage credit hike and LLPAs. We discussed it a little bit last week, but there's a lot more to it. Last week we discussed the fact that those with a credit score that was higher are now paying a smidgen more, so that those people with the lower credit scores aren't paying so much more to be able to get a house. But there are many other factors involved with a loan level price adjustment. So let's just take a little deeper dive into that mortgage credit hike and the loan level price adjustments. I first want to talk about the loan level price adjustment to just remind you what it is. It's adjustments that the lenders make based on the risk of the loan. And of course, the credit score is one of the obvious factors. But there's a lot of other factors that go into that. The type of loan in itself can be a factor. An adjustable rate mortgage, for example, is going to be considered a riskier loan than a fixed rate mortgage. Also, if it's a second home or an investment property, that's considered a higher risk than if it's your primary residence. So there will be LLPAs or loan level price adjustments for those as well. Manufacturers' homes, multifamilies, another area of where there would be a loan level price adjustment. But one of the things that was added in May 1st was a loan level price adjustment on debt to income ratio that was above 40%. Now, what does that mean? Let's first look at what is a debt to income ratio. Debt to income ratio is your total debt, housing payment, total payment including principal, interest, taxes, and insurance, along with your HOA dues, all of your debt, credit card, installment loans, child support, alimony, separate maintenance, all of the debt that you have divided by your gross income is what's called the debt to income ratio. That ratio, in the past, we've kind of always been able to push it to almost 50%, sometimes a smidgen higher, without really having much of a loan level price adjustment. But the recent change added a LLPA or an adjustment to any debt to income ratio that was over 50%. Now, that's a big problem for us from the aspect that there are a lot of times debt that you don't really incur that I have to use in qualifying. Student loan is the big example of that. Your student loan may be in deferment, but I still have to consider a payment in qualifying you. So that's one of the areas where that debt to income ratio and adding a hit to what the person would pay if that ratio is above 40% became a big factor. The Mortgage Bankers Association went to fight for you, and they are in the process of changing that LLPA to no longer give you that discount or that penalty, not a discount, the penalty for having a higher debt to income ratio. So the Mortgage Bankers Association is fighting for you to make sure that we get those LLPAs back in line. But in the meantime, don't wait. Call me now. Let's see how those credit changes affect you. It may not affect you at all. It may actually affect you in a very positive way. Don't wait. Call me today. Let's find out what the changes mean to you, and let's get you into the home of your dreams or refinance and get you out of that high debt into payments that you can afford. Thanks for watching. I'll see you next week.